Hey guys. Hey guys, thanks for joining.
Thank you for your time, Daniel.
Sure, bro, anytime. I'm here to help you guys.
Hi,
Daniel,
bro.
I wanted to say something. I don't want to overcomplicate it, but you have here an example. But if you go on TradingView, if you go then on the line chart, on the price line on the right, and you right click it, there is this thing that you can invert. You can the direction, invert scale, invert scale, up, invert scale. Yeah, exactly. You said that we need to see what the price does, and how do you say it? Like the complete opposite. But in this case, with an inverted scale, what if we look at the price that correlates and does the same thing with the DXY?
It does. Look at this one. So look. So it's pretty good that you told me how this works. So I never knew this. But let's reset this one, and let's also reset this one. So if you let me do something. So zoom. It seemed like something I zoomed, so I could like just a second. Let me check something. So
Do you want to zoom?
no, it's fine. Let me check something. Okay, this is what I wanted. So if you look at this one, so let me put it on top of each other. Okay, never mind. Where you see it here, this is when we do not have SMT, where technically the price is doing the same thing, right? So here the market goes down, goes up, goes down, creates a low, creates a high. See, same thing, exactly the same thing. Again, creates a high, another high. Everything is exactly at the same spot, right? Here too. Here again we have this high, again this high. So again, every single time we pretty much have the same thing. Also look at this one, we have this high, and we also have that high on the orange. We have this low on the blue, we have again the same low on the orange. We have same highs again on both lines. Here too, this high is the same as this high. This low is the same as this low. And I can go on and on. But if you look at the SMT, this one, you will see that at this point, the orange line, so Dixie, is still creating the highs, right? So it's moving up a high, it creates a low, it creates another higher high. So again, as we've seen in the past, so now we inverted the two lines, or the Euro-USD is inverted. We see when we do not have the SMT, so they are both moving into the same direction, we can see that it's creating the same thing. So we have this low, we have this low, we have this high, that high, same thing. But at this point, Euro-USD, so the blue line should have been creating the same high as this orange line, right? So it should have been creating this high, but instead it did not create that high, it created low right there. So it went lower, but DXY is still moving higher. So it's pretty good that you showed me this, but this is the main idea behind it. So you wanna see one of them moving like that. So I guess it should be making sense. And here is like, now we look at the opposite one. Here is still moving to the upside. See, that creates a new high, but the euro as it does not create a new low, as it should be creating it. It instead stays there and creates a high, or a higher one compared to this one. So this is the SMT right there.
So, bro, I have a question. In this case, if the euro dollar created a lower low, you are not considering it like a sweep, but like a break of structure.
This low, which one are you thinking of?
Yeah, that low.
This low, you can clearly see that this low did not create a lower low compared to this one, right? So that means
yes, bro.
that means DXY is liquidity sweep, right?
Okay, but I was asking if we are creating a lower low on Euro USD with the confluence of DXY, you are not considering it like a sweep, but you are considering it like a lower low, so you are not trying to find a buy.
Yes, that's what you gotta look at. So that's pretty much what you gotta look at. So if this would be creating a lower low, then obviously the whole direction and the whole directional ID of the daily cycle on that current day moving higher would fail, because we are still moving the same direction as with DXY. So that's when we would create a new lower low, but we did not create a lower low. So that means the algorithm is changing the direction of Euro USD, and Euro USD will be creating higher prices. See, so I can. So what? Let's look at a couple of other examples, and I think the more examples we look at, the more sense it will make. So let's look at a couple of other ones. Probably in US 30 and the indices we have a lot. Okay, I'm not sure what's happening here, but I think it's just that. Okay, now I got it. So let's pull up. Okay, the thing is, it's not with DXY, it's correlated with S&P, I think. You know what? Fuck this. Let me go to the US dollar pair so it can make more sense. Can also look at. I wanna find a couple of things that look good. So to be honest, I'm not really using the SMT every single day. So it's not an every single day thing. It's like really an additional conference you can use. So it might take a few minutes to find something. So that's why it was confusing. I was looking at the US 500. Okay, seems like nobody noticed that. So that's why it was confusing. Probably. What the hell? Still same thing. What? Oh shit. Okay, this is DXY finally. So now it will make sense. You know, it usually happens at the reversal. So if you look at the lows where we see the reversals, that's where you want to see this. And it's kind of interesting because it's moving the same direction. See, this is probably not the best. But, you know, it also works on positively correlated pairs, like let's say you would use GBP USD with Euro USD, so you know they are positively correlated, so they are moving into the same direction. Then you could be anticipating, you know what, let's pull up Euro USD. Yeah, you can use like this.
Now go down. There is a big table. Yeah, go down. Yeah, this one.
Well, yeah, you know, that's what I wanted to do. So obviously, Euro USD is correlated with the GBP USD. So, you know, you have to look at like pairs like when you want to use like SMT with Euro pair, you would look like other Euro pairs, or, you know, like obviously with the US dollar pairs like GBP USD, DXY, Australian dollar USD. So you want to look at US dollar pairs, but we can, let's say, find something. You know what, let's go with the EUGU. So I think that's where I can probably show you what I wanted to show. So GBP USD, Euro USD. So, you know, now these two are basically moving into the same direction. Okay, I think this one might explain it, because, you know, now it's different compared to the DXY, because, you know, we are obviously not looking at the opposite direction. Now it's rather the same. So, you know, now the way you would use it on GBP USD and Euro USD, you know, obviously on Dixie, we've been looking at, so this is the way we done it on Dixie. So we had, let's say, DXY moving to the downside, but Euro USD was moving to the upside. So, you know, it was obviously the opposite, and the thing you wanted to look at there is Euro USD creating another higher high if DXY is creating a lower low. See, so if this is what you see on Euro USD right there, so it's not creating a higher high. If DXY is creating the lower low, then it's obviously the SMT. But in this case, when something is positively correlated. So let's say if Euro USD is moving to the upside, then GBP USD would be moving to the upside again, just like slightly differently with a little bit different chart. See, so it's both moving to the same direction. Then the way you could use it is if Euro USD is moving to the upside there, GBP USD, you want to expect the same. But at one point, let's say if GBP USD is not creating again a higher high, so Euro USD is creating now higher highs and higher lows. So this was a higher high. But let's say GBP USD or Euro USD would not be creating another higher high there. So you would not see this. You would rather see this on the other one. It starts moving to the downside instead of creating another higher high. It does not create a higher high. And at that point, this could be confirmed, this high, as a possible liquidity sweep instead of the structural break in the market. You know what I mean by that? So, if in case anything is unclear or confusing, just let me know. So what I mean by that, so let's just mark this up because this will be like, I think, pretty good example for this. So let's just move to the side so I can draw a little bit. So again, now let's imagine now the black line is GBP USD. And let's say this one is Euro USD. So it's obviously moving to the same direction. So now it's it's not like DXY. When it's opposite, now you will see the same. And let's make it a little bit thicker. This one too, like that. And just make it more visible. So this is what you typically would see on GU and EU, both of them moving in the same direction. But let's say GBP USD is at this point. So it creates a higher high compared to this one. But Euro USD, typically, so this is what would happen, right? So you want to see the same. But if you do not see the same, and Euro USD is only stopping right there, and you see something like that, GBP USD created now a higher high, but Euro USD is moving to the downside. Now this would be the SMT correlation between these two pairs. And what does this mean to you? The reason why this could be pretty significant, because then you could confirm that, all right, GBP USD was possibly only a liquidity sweep in the market. So this might only be a liquidity sweep, and Euro USD is pushing down. That means this might be, and it's likely to be, only a liquidity sweep instead of a directional continuation in the market, because it created another higher high. It created a higher high, but Euro USD did not create a higher high as it should be creating a higher high. It only stopped and it did not create anything higher. So this would be an asymptotic correlation between, and asymptotic divergence between these two pairs. And at this point, you could use this to confirm a possible, just buy stops. You could call this like buy stops. It just sweeps the liquidity, and it would confirm you that this is a directional change. And this is the real chart example of it that I tried to explain. So obviously, you would most likely see the same, right? So here you see GBP USD moving down. You also see Euro USD moving down. Here you see it moving up. Again, you see it moving up. But if you start looking at these highs, you see that at this point, Euro USD started creating a lower high instead of creating another higher high. So this would be considered as the S&P divergence, and you would be able to know that this here was likely like a liquidity sweep in the market. After it's quite obvious, you had this OB comes back, optimal trade entry, bunch of things you can start doing after that. But again, this is like another way of using the S&P. So you could confirm that this is only a liquidity sweep, and we should be going lower because Euro USD also created a lower instead of making a higher high. So that's also another way to use it. If both pairs are positively correlated instead of negatively being correlated, like Dixie. So that's the way you use it. Anybody has any questions, let me know. Or maybe
no, I think that we should actually put the time in the charts and find our own examples. I mean, we know now the concept, and yeah. I have a question about the market maker. How it's called, market maker buy model and sell model.
All right, go ahead.
Yeah. Do you have any criteria when drawing the boxes, like reaccumulation or all these boxes? Do you have any criteria, or you take just a range in general?
Drawing the boxes does not have criteria. It's like sort of just marking these up. Like here you have the consolidation, an impulsive, not a consolidation, impulsive. So you just kind of place it here. It does not have to be like accurate or anything like that. So the idea is, like again, you're just marking up what's going on. So it does not have to be accurate. Like same thing, I think, on US dollar Canadian. We technically had, again, the market maker model, if you remember. But like the boxes do not have to be accurate. So you can like place it like kind of here. So it does not have to be super accurate. Just place it on. So it does not have any criteria, to be honest. You just put it on. But it's not important to mark this up. It's just like sort of like a reminder or something to help you. Yeah.
And after a model is complete, what do you do?
After the model is complete, you close the trade.
Yeah, but no, let's say you have like this model on 4 hour, and the model is complete. It reached the original consolidation, and maybe it breaks. After that, are you looking, let's say you were looking to buy models, it was a buy model, after it breaks, do you look now for the sell model?
Not really, to be honest. So, after it, let's say this would be completed. It's like completely, like anything could happen after that. It could reverse, it could move higher. I'm not really thinking of it like that, like after it completes it, like what am I looking at? When it completes it, you will see what to look at. So you will see at that moment what happens in the market. So until this, anything can happen. So you will, at that moment when this is completed, you will notice and you will see what to try to look for in the market. So it's at this point you do not want to sell, do not want to buy anything. So it's just only a directional idea. Like let's say the price would be at this point and gives a buy. You want to see higher prices until this original consolidation is taken out. So this is the main idea of using it. So you want to use this as, you only want to use it as a directional ID giver,
Bias.
I would say. Yes, bias. Yeah, so it's just giving you the bias. Like if you are at this point, you will still be looking at bias because it's still not cleared the original consolidation. So these are the things how you gotta use it. Or like you are at the smart money reversal, the market breaks it, comes back, creates optimal trade entry, then you could use these here as an ID and as a bias to trust that the market should be moving higher at this point. So you're only using it as a bias, but after it's completing, so you have the completion, you just have it completed. So at that point, you close the trade, you target like 20 pips, you can do like bunch of things, to be honest, but it's like not really an exact way of doing anything after it's completed. It just completes, and after that, anything. Who knows what patterns and what the market does after that? Nobody knows.
So for the daily bias or for a daily idea of what price could do, you use this model makers, or how they are called. Nothing else.
Yes, it's only for directional bias, correct.
Okay, thank you.
Sure thing. Anybody has any questions, just let me know, but if not, I will just end the recording and upload it in the group.
No
All right,
question.
no questions here. All right, thanks for everyone's attention. If anybody has any, sure, no problem. So if anybody has any questions about this, what we discussed today, just send me a message, or just ask me any questions you have, and I will answer your questions the best possible way I can. So see you guys. Have a good night. Bye-bye.
Bye.